Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, September the 16th. The year is 2025. Let's talk trading. Present does not always equal the past. These videos are for educational purposes only. Your results may differ from mine. And to make sure that you don't lose too much, make sure your risk management's in place so you never lose more than you're willing to lose on any one single trade or during any one trading session. So the present or present does not always equal the past. Now the reason I'm making this as a topic is because I talked about fear in a recent video, and fear can paralyze you. Because even though your method, your system is showing you all the reasons to enter the trade, you hesitate or you fail. And then that might bring you some pain. Either the pain because you missed out, or the pain because you didn't enter properly and you didn't get as much profit as you could have gotten. So what you have to embed is that the present does not always equal the past. And this works both ways. In other words, the last time all your signals were present, it worked out. And so the next time doesn't mean it's going to work out. Or, you got in a trade and you had all your signals and it didn't work out. In other words, you had to hit your stop. So then the next time you get all your signals, it could go your way. The thing is, this is trading and you don't know. And that's why you have that risk management, the preservation of capital. And in fact, because you don't know, and I think I might have mentioned this yesterday, that's your main goal, is to not lose too much. I mean, you might think your main goal is to make money, but it's actually not to lose too much. And it sounds counterintuitive. But the thing is, you take your signals and you keep taking your signals, and you just might show a profit. In fact, a reason I meant to do this video about 15 minutes ago, but I got in a trade. Actually, I got in a trade. It went against me, and then I took my next couple of signals, and then I could have gotten out of all, but I hate to see have that loss on the board. So I didn't get out of the one that was only down maybe a pip. And you probably already can guess the rest of the story. It ran up. It ran all the way up here when I should have been out. And I think right here is where is it here? Yeah, I think, or was it here? It was one of these one balls I should have been out. And I didn't get out of all my trades, and it ran against me. And I was right here. By the time it hit up here and started coming back down, and I added on a couple more times because I was going short, I finally got out. Oh, what? About 6 minutes ago or so. I think I got out somewhere around here. Yeah, somewhere around here. Because you can see here, there's a flip-flop box and some state. Actually, there was a flip-flop box, plus this was an outside bar. That was a good place to enter. Indicator 2, it turned magenta. So I popped out, and out of all those trades, I think I netted 2 pips. Point being, or was it, yeah, I think it was 2 pips. Or was it? Yeah. Point being is that I had to take these trades because I didn't know what the market was going to do. And so yes, I was down, and yes, I added in, but sometimes you have to have no fear. And you just have to trust the method, make sure you're not too far away from your original entry. In other words, you haven't lost more than you're willing to lose. You're not behind. And then the thing is about the past, you can sometimes learn, or actually you should learn from the past. And the thing is, a mistake is when you don't follow your plan or when you execute improperly. Example, if you wanted to buy and you accidentally hit sell, that's a mistake. You know, if you were late to entry and you jumped in anyway, that's a mistake. So you have to work on not committing those errors, those unforced errors. It's kind of like in pool. Sometimes you have a clear, easy shot and you miss. That's on you. Sometimes uh, your opponent leaves you with like no shot at all, and then you don't miss, and you have to play it safe. That's not your fault. That's just the market, or telling you don't get to have a clear shot every time. So a lot of times when you get in these trades, or you look at it, you think everything's right and you're looking for reasons to enter, and you might start making up reasons to enter because you want the present to equal the past. It's like, hey, I got these signals. But if you just look at the chart, it usually will tell you something. So for me, there's a flip-flop box right there. But I wouldn't want to trade against the last three ball, meaning right here. So you want it to go down. Now, something I've observed, because Walmall said he likes to play the edges. Well, if you kind of take your eyes and you can see here, you've got this range that has been put in right here. And then if you look here, you can see there's another range. And it made me think, it's like, this is almost like those Darvis boxes. And Darvis was one of those traders that made a lot of money. And he came up with this idea of Darvis boxes. And so you see you had this box area right here, this range area. And then they put another one up here. And then you can see right here, most people would say, okay, this is resistance. And then now you got new resistance, and then resistance turns into support. And you can see right here what happened. And you probably can't tell, but right here, there was a slight gap up. And then you see right here, price had to come back and fill the gap. Sometimes, the market will leave clues like that. And then you see you got this big bar here. I would call that a return bar. You see that's an 8, and everything else is under 4. So that kind of means price probably wants to return maybe to this level. But then, if you look at that quote unquote trend line here, however you want to draw it, maybe you want to draw it. Okay, why? Maybe you want to draw it like that. And then you can see right here what's price doing. It's forming that another little range. And so, once again, I didn't want to trade against that 3-ball. So I'm pretty much looking for shorts. To tell you the truth, I was looking for shorts all the way up. But you just have to realize that, you know, the past doesn't, what happened in the past is not necessarily going to happen again in the present moment. Now, a lot of times, you know, things will repeat. Meaning, you'll see something, or your particular entry method appears, and it appears again, and it appears again, and you could take all those for wins. And then every now and then, it'll come in and you'll take a hit. And the thing is, you just might want to start messing with your method, but no, that's not the proper thing to do. Now that we have a 3-ball here, now I'd want to start looking for longs. But you have to wait. I wonder what's making price do that. See here, we got another 8 range. So you see where came all the way down to the 50 and bounced. So once again, this resistance turned into support. You can see that a couple of times. Actually broke the previous M30 low right there. But, you know, even though I'd mentioned that, you know, all I wanted to do was look for shorts and take these plays to the downside, does that work every time? No. Because right here, if I wasn't not mistaken, that's when the 3-ball first appeared. Or maybe it first appeared here. And there was no shorts to be had. And that's why you have to wait for your signal. And it's tough sometimes, especially if you're in a trade and it's going against you, but it hasn't hit your pain threshold or your stop loss, and you want to start to add in, and you want to wait for that signal. And you see right here, this might look like could have been a signal to go short. This looks like that could have been a signal to go short. But if anything, you'd want to wait. And so this trade, if you had jumped in, would have basically been one of those instinct trades or psycho trades, because you see what happened here. You say, okay, maybe the past will repeat. and so you take the trade. And right now, if you'd taken that trade, you could be out with about 8 pips, 9 pips. But then it could have also come crashing down too. But that's trading. So, fellow traders, as always, please remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.